Welcome to the Thought Leadership Forum Journal, the audio-video podcast of the Thought Leadership Forum, which was launched somewhere in 2005, arising out of a public policy dialogue initiative incorporated in 2008, and this is the podcast series. We are privileged to have with us in the studio today Michael Cole-Fontayn, the chairman of the Chartered Institute of Securities and Investment of the United Kingdom. Thank you for being with us in the studio today. We will focus today on what the CISI is, the Chartered Institute of Securities and Investment of the United Kingdom, and your role as chairman. And let me begin by asking you to confirm to me whether the way I described CISI is correct. So CISI is United Kingdom's leading professional body for those working in securities, investment, wealth management, and financial planning, serving a global community of very impressive 54,000 members in more than 100 countries. And as I understand it, you have over 40,000 examinations across 80 countries. You focus on governance, integrity in the financial market, the banking industry, and you're very well known for that program that we did many years ago, Integrity in the Workplace.
I think, Ranel, you've got it spot on. Thank you. Yes, those numbers are impressive, but I think it's the last point you make. We are integral to helping develop and educate throughout their careers by way of continuous professional development, those finance professionals. And I think this has never been more important because we need trust in financial services, financial advice, financial products, and the people who deliver and explain them need to have the knowledge, skills, and you use very importantly that word integrity in order to call themselves professionals. I think that is a very good description, so thank you for that.
The CISI operates in Sri Lanka as well, and we can discuss that in a little while. But essentially, if the hallmark of professionalism is independence and objectivity, honesty and integrity, let's just anchor ourselves on the word integrity and move on from there. Given that developing countries like ours, there is often a tendency for people to believe that the ills of the economy are as a result of a market economy being open. And this has been debated time and time again in my country. I would like to start from there. My position has always been, and through this Thought Leadership Forum, through columns in newspapers, sessions conducted at various places, I often say that the market economy is as good as effective, up-to-date, fair, just, equitable regulation. So it is not about the freedom of the wild entrepreneur, but far more importantly, in a market economy that provides for a wide cross-section of people in all strata of society, but regulated well. Often people want regulation removed for the economy to flourish, which is, I think, a mistake. I have written under the caption, for example, a robust regulator is a fundamental ingredient in a sustainable market economy. So with that as a background, can I ask you, Michael, that given that we experienced just 15 years ago the global financial crisis, as chairman of the CISI, can I invite you to reflect on the global financial crisis of 2008 and to share with us how you see UK's banking industry having rebuilt, quote unquote, public trust?
My own view, having worked through the global financial crisis, is that it was a very systemic occasion and series of events. When you have something that affects the system, and not just the system in one country, but many countries, particularly those with open market economies, then it takes a very long time to recover. And probably the most critical ingredient to recovery is trust and confidence in not only markets, but specifically in financial services, financial advice. It was the banking community that substantially broke trust. And I always thought that it would take at least 30 years to rebuild trust. So we are maybe halfway through. I think we still have a long way to go because concern about financial markets and trust in financial markets gets passed down through the generations. So the parents will tell the child, the grandparents will tell the grandchild, and market incidents where markets have not been trusted live long in the memory. It can be an intergenerational issue. So we're halfway through rebuilding trust this time. So we all still have a lot of work to do. Sure. And it is ultimately our solutions, our services, our products, and the people who deliver them need to be safe, trusted, reliable, and they must serve the client, the consumer, the citizen.
I want to get a little more specific, and my mind goes, Michael, to almost 2 decades ago in an interview just like this. You might recall Sir Brian Pittman of Lloyds Bank, who's known just like you today for the ethics and discipline and the honesty and integrity with he ran the Lloyds Bank, making it a far more profitable, respected bank. Comparing that is the Lloyds Bank, with Northern Rock, which collapsed just a little before the global financial crisis. And I think what had happened, if I recall well, is the big bang of the UK under, which Prime Minister was that?
Prime Minister Margaret Thatcher.
Was it? Or
yes.
Subsequent? Anyway, they introduced this concept of the Financial Services Authority, a single regulator as opposed to multiple, opposed to a banking regulator, an insurance regulator, and a capital market regulator. They brought in the FSA, which apparently had people more experienced in insurance who did not inspect that the on-site inspection of Northern Rock, as a result of which the risks that Northern Rock took by borrowing money not from depositors, but from the open market, resulted in the risks that were not managed. And it collapsed, and there was, as you recall, a run on the bank. And that was, if I remember right, just at the beginning of the GFC, the global financial crisis. My question to you is, do you think the banks in England today are far more strong in terms of governance, ethics, discipline, and also what changes have you seen in the regulatory environment from that FSA era to what it is today?
Well, Ranel, you are a student of financial history. Clearly, having been a very eminent regulator, you have studied many matters and many crises and learned from those. I think you are very correct, and thank you for remembering the late Sir Brian Pittman, one of our most eminent and distinguished practitioners in financial services. So there's been a long journey of regulation, certainly in the UK, and the original regulators, the Bank of England, the Stock Exchange, and the Lloyd's market. And obviously there have been many market developments, not least the demutualization of the London Stock Exchange, and the initial regulator that was set up in the immediate aftermath of the Big Bang, which was essentially ending of dual capacity. You could not be an agent and a principal, meant that there have been various phases. So initially, the regulator of banks continued to be the Bank of England. And for the securities and investment markets, an organization called the SIB, or the Securities and Investment Board, was established. That sought to regulate activities in securities and investments. Those markets are quite complex, complicated, large players, small players. And with Big Bang in the UK, there was a lot of business combinations with banks buying brokers, banks buying market makers, investment managers merging or being acquired. And so a whole new financial ecosystem was born, and it became clear that the regulatory response to that needed to evolve. And you are right, remembering the Financial Services Authority. And at that time, responsibility for regulating both banks and insurers moved over to a single regulator. As we roll forward to contemporary times, some of the language has changed. We have a Prudential regulatory authority, the PRA, which comes under the Bank of England. So that is the principal regulator for wholesale, large banking markets, and particularly the wide range of banking services, investment banking and capital markets, through to commercial banking and retail banking. And then on the Securities and Investment side, the principal regulator has evolved to become the Financial Conduct Authority. And I think that word conduct hides many responsibilities, but conduct talks both to integrity, it talks to culture, and it talks to the way in which conflicts of interest are managed and selling and intermediation takes place. So we still have quite a complex regulatory environment, and many organizations have two regulators at a minimum,
right.
The PRA and the FCA.
Thank you. And that's what I regard as a refreshing, collapse-driven regulatory changes. Why I mention this, Michael, is that often the International Monetary Funds or the World Banks or the Asian Development Banks, when they feed teams into this country, so many years ago, in an ex officio capacity, I was on the Securities and Exchange Commission, long before my previous two occasions. As president of the Institute of Chartered Accountants, the act of the Securities and Exchange Commission Act provides for the president of the Institute of Chartered Accountants being on the commission in an ex officio capacity. But it was time that the FSA had been formed, and there was a lot of pressure brought upon the Ministry of Finance, and that was relayed to us on the SEC as commissioners, that we, Sri Lanka, should also move towards a single regulator. Now, I had worked closely with the governor at the time of the central bank, late S. Jayawardena, a very good governor, who was Secretary Ministry of Industries when we had the then minister with some strategies for industrialization. I resisted this move, but I was in a minority. I had met people on FSA who said that they think that that was a mistake. But even though I resisted, the government of the day insisted that we move to a single regulator. This part of the history of this country's evolution in regulation is not written about very much. The ministry then decided that from among the SEC commissioners, Ranel Wijesinha will be left out, so one other person, but they took 4 commissioners, made them members of the insurance board, and they were performing the role of SEC commissioner as well as commissioners on the insurance board, which I thought was a mistake. But even Sri Lanka moved away from it, and I was happy to see that move by about 2004 or 5. That is about 4 or 5 years later. But why I mention that is that often we tend to be sometimes even intimidated by the IMFs or the World Banks. No offense to them, they've done a lot of good work as well in the country, insisting that we move to that Western model. So I'm happy that we moved only for a short while, and we saw the ill effects of that. Connected with that, Michael, I want to ask you, CISI emphasizes on integrity at the heart of professionalism. What practical steps do you believe financial institutions and regulators must take to make integrity a measurable performance indicator?
So one of the things that is quite difficult to measure is integrity. If any of you who are listening to this podcast and following our conversation want to think about that word and think about your own very personal description of it, it is quite challenging to think how you might describe it and measure it. However, if we ask you to consider the absence of integrity and give examples, I think you will all quickly rush to easy case studies and
right.
decisions. We really miss integrity when it is absent, and we take it for granted in our trust of institutions and individuals who appear to be plausible. And so I think you're absolutely right. And I think that has been the purpose of the Financial Conduct Authority, to try and get to that nexus of integrity in all senses of the word. So you want to ensure the systemic integrity of your markets. You want to ensure the systemic integrity of individual institutions. And you want to be assured of the integrity of the leadership and the governance structures of every organization. And therefore, I think it has often been easier to test for culture than it is for integrity. And at the CISI, one of the things that we help our members with is to ensure that they really understand how well qualified and evidence that qualification our members are in order to deliver the services. So as we deliver knowledge and the skills, we also talk about the behaviors. Mm-hmm. And if we can get every single one of our members to take an integrity matters test, mm-hmm. then they understand that the matter of integrity is quite challenging. Sometimes there are no answers. Sure. Things are not black and white, they are gray. And so feeling comfortable escalating when things do not feel right or you do not know the answer is really important. Certainly, our regulators in the UK, since the financial crisis, have introduced something called the senior managers regime, right, which has been very helpful because it indicates very clearly from a regulatory point of view who has the responsibility, mm-hmm. who has the accountability, mm-hmm. for certain functions. It is now very clear within an organization. It is the performance and the accountability of all those designated functions that create the framework and the map for accountability, and all of those matters roll up into an organization having an integrity has a framework of conduct, and that gets expressed through the culture. I think very simply, don't lie, don't cheat, don't steal, are pretty good ways to operate in life. Sure. And if all of that adds up to a greater sense of integrity, I think that's a good way to think about it.
Rather than wait till the end, I must again thank you, maybe as representatives of the world, for the role CISI plays and the particular role that you play. But I want to also touch on something else that just crossed my mind. I have found, while we encourage best practice, even as Institute of Chartered Accountants of Sri Lanka, there has been over almost 2 decades in Sri Lanka best practice in governance, corporate governance, awards for corporate governance. I often find that all over the world, there are boards of directors and particularly select directors who try to take cover from what is called legal. Well, it's legal, so let's do it. Interestingly enough, a couple of years ago, I attended a Harvard course, Kennedy School course, which is titled Strategic Management of Regulatory and Enforcement Agencies. I think about a 2-week course, a fantastic professor called Professor Malcolm Sparrow. He introduced the concept. That was something that was very unique that I thought I learned there. He drew 2 circles, and he's written about 2-3 books under this called harms. This circle is legal, this circle is harmful. Legal and harmful overlap. So what do? Simply because it is legal, it does not mean that you can continue to do it. Now, I brought that concept back, and when I was chairman of the Securities and Exchange Commission, a very interesting thing happened. An insurance company wanted to delist from our market because the insurance regulator in our country allows any insurance company whose parent is quoted on, let's say, a stock exchange in London or Hong Kong, not necessarily to be listed. I didn't agree with that, but that was allowed. And then they came up with a number to delist from the market. Most of the people on the Securities and Exchange Commission, been there for many years, told me, the very words of chairman, we do not get involved. The company law provides for it. At a special general meeting, if they vote in favor of the delisting at this price, then we as a regulator don't step in. But I had a serious complaint from one of the founder directors of that organization who was no longer in that. So, like I said, Michael, before we spoke, that this is an exchange of ideas, not just an interview. So I'm going to share this experience of mine, where I thought I will entertain the complaint from this complainant, put it to my commission, the executive directors, and said, I would like to look at this concept. Yes, it is legal, but is it harmful? You know what happened? Everybody got on board. The foreign directors of this company came down. They had about 2 sets of interviews with us. And I said, look, I'm not directing you. I'm only saying be ethical and morally proper. That's about integrity. Ultimately, to cut this long story short, they divested at 5 times their initial offer price. I shared with Professor Malcolm Sparrow that little learning that day went a long way to demonstrate integrity as a regulator, where we didn't direct, but we said demonstrate. So moving on from there, another aspect I want to cover is that just as much as you mentioned the PRA, the Prudential Regulatory Authority, and the Financial Conduct Authority, and sometimes, correct me if I'm wrong, the FCA has even looked at the quality of auditing. Is it professionally the best practice? We in Sri Lanka many years ago, clearly way before the GFC and Dodd-Frank and all that, set up a institution by an act of parliament called the Sri Lanka Accounting and Auditing Standards Monitoring Board. Now, this is independent of us as a profession, sometimes unfairly perceived to be self-regulated, but this SLASMB has, as it said, a nominee of the central bank, often the deputy governor of the central bank, and members from chambers of commerce, the register of companies, and also members of my profession. The United States set up the Public Company Accounting Oversight Board. And in the context of Donald Trump's second presidency, in his first presidency, he said, we will get rid of the PCAOB because it's a duplicate. We'll chuck it under the Securities and Exchange Commission of the USA. In fact, I wrote a piece in the Financial Times to say that is a regressive step. And that's where I would like to compare the regulatory environment in England, which I think is far better, no offense to the United States, than the United States, which is rethinking and tinkering with the regulatory institutions, without which you can't really have a respectable market. Against that background, what we have and what the PCAOB, would the FCA be the equivalent in the UK?
So there's a lot in what you've just said, Ranel, but fundamentally, and I think your example of the delisting in Sri Lanka and what was fair value to buy out minority shareholders goes to the heart of some of the most difficult and challenging issues in finance. And we rely a lot on the integrity of the accounting profession to help us establish good books and records, accurate controls from which financial market analysts can understand and interrogate the numbers, which we receive periodically. It may be annually, semi-annually, quarterly in some cases, and so on. All of this within the frame of the law, which you also mentioned. And between what is lawful and what is harmful is perhaps, as you identify, the grey area of what is fair. And I think in your example, you as the regulator were seeking to establish what was fair for and on behalf of the minorities. And there is clearly a conflict of interest with control shareholders who wish to buy out minorities at the lowest possible price, the minorities who want to get a fair price. Between that, much judgment can be made. The important point here is that the accountants who conduct their audits and ensure the integrity of the controls environment and the legal requirements to disclose and the full force of the law being deployed when that doesn't happen needs to be robust. And certainly the US establishment of the PACCOB was a very constructive step. In the UK, the equivalent body is the Financial Reporting Council, which oversees and ensures the conduct of the audit process in particular, but the regulatory reporting process as well. And the FRC, Financial Reporting Council, work very closely with the Financial Conduct Authority. I think collectively all these bodies getting and ensuring the integrity of information that is disclosed at every stage appropriately to market participants.
Sure.
And one of the issues is these building blocks of the law and accounting absolutely critical and perhaps even more critical in the development of private markets. So that is an area we may come to, or in another podcast. But being able to establish value and to be able to rely on books and records, absolutely critical.
Thank you. And, I do not know whether this is a fair question to ask you, but I'm asking this very sincerely. I'm a little worried about the unbundling of desirable regulation, not undesirable, but desirable regulation in the United States of America. Now, it was, I think, the 20s or 21 or thereabouts that President Trump, then in his first term, wanted to disband or fold up, as he called it, the PCAOB. Now, in his second term, if I remember right, I think the PCAOB head, I think it was a woman professional, the PCAOB has been folded into the SEC. And I'm concerned and I'm so happy that we, Sri Lanka and the United Kingdom, have something much better. But against that background, Michael, a mischievous question, if I may, not to incur the wrath of the United States friends that I have, but I like to think that if the United Kingdom post-Brexit may be having competition from the US, Dubai, Singapore as markets, given these issues in America, I would like to think that London is still the preferred. Now you are biased, but I would like you to detach yourself from being who you are. Do you think there's any merit in my comment that if I were to list on an exchange and I have the option of USA, Dubai, Singapore, and the UK, let us say those four, I would most certainly choose London. Just as an extension, not only about the regulators, but the focus on the quality of auditing, which is getting increased attention in the United Kingdom. Your comments, please.
Again, a lot in that question, Ranel, and I think any financial professional, certainly in the corporate finance world, would need to evaluate what was best for the company and to ensure and optimize not only their primary market listing, and perhaps that also includes a capital raising, so all manner of questions around valuation. The London market will always be a contender. Certainly, the deepest, most liquid capital market in the world with the widest range of investors in the world is undoubtedly the United States. And that is a huge magnetic draw, but it is not right for every company. And each company will need to seek advice as to where it can best fulfill its long-term objectives. Because perhaps gaining your listing by way of a public offering is perhaps the exciting, it is hard work, but it is the initial step. But you intend to maintain your listing over many years and come back to the capital markets in an ongoing dialogue with your investors and other market participants. Mm-hmm. So I think you need to be able to ensure that your company is able to sustain its listing venue strategy. Many companies, particularly the larger companies, might choose a dual listing strategy. So you can list perhaps on what may be deemed your home market, but also another market as well. And in particular, US markets have been attractive.
Dual listings, yes.
So it's important that the company and the investors have the power of choice. Right. And I think that is really important.
I'm also going to touch on something very interesting, because increasing regulation in UK and various other countries, maybe Australia and New Zealand as well, and attempt to deregulate in the United States. Now, many years ago, the Sri Lanka Institute of Directors, and I'm sure that the SLID was modeled on the Institute of Directors in the UK, I think. And I'm sure you must be having a lot of dealings with the Institute of Directors there as the body, as CISI. Many years ago, the president of Sri Lanka SLID invited me to do what is called a session to perform the role not of a moderator alone, but as a challenger, a provocateur, a discussion catalyst. And I did that under the Thought Leadership Forum. This may be 10 years or more ago, where the theme was performing while conforming, urging the directors of listed entities or any entity not to lose sight of the importance of regulatory compliance and conforming, anti-money laundering, or whether it's accounting and auditing standards. And you know, Michael, in our country, the accounting and auditing standards, unlike yours or the United States, is gazetted. So it is law. You can't be illegal when you depart from a standard. Against that background, where we urge, you know, some people tend to think an accountant is inward looking. I don't think so. I think there are lots of accountants in my profession who have been outward looking. But you can certainly perform, which is strategically redirect or direct your company to various stages of growth and profitability, expansion, diversification, acquisitions, while yet conforming to the rules of the central bank, if it's a company that has a bank within its portfolio, or the stock exchange, or the insurance regulator. But that's a tough question. It's a general question. You can give me a yes or no answer or one-line answer. Do you believe that it is possible to perform while conforming?
I certainly do, and I think it is critical that you comply with both the letter of the law and or regulation and the spirit of the law and or regulation. Certainly the case that every economy around the world is trying to make a balance between fair and proportionate regulation and facilitating market growth. And by market growth, we tend to mean capital formation. Certainly the US is experimenting with how to drive its own economic growth, and it is looking at the levers of regulation, making sure that regulation is efficient and enabling and not duplicative and stifling. I think you will see regulators experimenting with different issues, and you've certainly seen it in how to bring the climate into account and accounting and reporting. And it is no surprise that there are major differences between different countries in how they think about that. And that is a stark difference. The US approach, I think, is actually quite an enlightened approach, because using the full force of the law, if a company does not explain and disclose the risks that it is exposed to, including climate risks, it is likely to be subject to litigation and probably enforcement action. The US comes at it from a fairly unique perspective, but it certainly does not seek to avoid or deny, but it puts the onus and the burden on the company to disclose. Maybe other markets, and let us say the European market, for example, is much more disclosure focused with lots of prescription. When it comes to technology, technology is developing at a faster rate than regulation, and you cannot possibly regulate. So that other word that you used is really important, and that is standards. If we can set standards for disclosure, standards for understanding behaviors, standards of integrity in dealing with matters of climate or matters of technology, and explaining those risks very clearly to all the stakeholders. We can be prescriptive for comparative purposes, but I think the most important thing is disclosure. Sure. And different countries will come at this in different ways. Sure. But over here, you have a regulator who I think is committed both to regulation and very aware of its facilitation responsibilities as well. And I certainly commend the Sri Lankan SEC for its very thoughtful approach to its 12-point action plan for reinvigorating your capital markets. So again, I think we can learn lessons from Sri Lanka as well, and it's important that each market understands what other markets are doing and why.
Michael, actually, a couple of years ago, if I go back 10 years, there was a perception that there was a lot of insider trading, front running, capital market offenses. And that was one of the platforms on which the government, called the Good Governance Government, came in 2015. And there was a very high expectation that we will go after the insider traders and all. Unfortunately, that didn't happen for about 3 years. But though I say it myself, I must say that I was privileged to be invited by the President and the Prime Minister and the Finance Minister to serve as chairman of the SEC in 2018. I had the unenviable task of revamping, in fact, by about 5 times, the investigation department. And we took on board a lot of issues that had been left undone. We filed action against insider traders. Some of those cases have been settled. Some of those cases are still going on. For the first time in the history of the capital market, until then and even up to now, we managed to get a broker to compensate investors who they had actually abused financially. And also for the first time, these disclosures are not made by people. I'm not talking about only accounting and auditing, but disclosures that directors have to make, conflict of interest issues, disclosures that directors of a company that had even Malaysian shareholders who did not disclose downgrades of rating of their debentures. We find them for the first time in the history of Sri Lanka, a large amount, something like 60-70 million, and that was paid up. But at the same time, we had road shows. We had many events, even after the after the Easter Sunday bomb blast. And we focused on capital market development. So just like we discussed earlier, can directors on boards perform while conforming? We believe that a regulator can capital market develop while not losing sight of being an effective enforcement agency. Brexit is something that we didn't discuss much. I think it's important to ask you, post-Brexit, without going into detail, do you believe that London might be affected as a financial hub, or you think that whatever risks that might have surfaced and deficiencies that might have been brought about can be risk managed?
It is critical that any risks to markets or changes in organizational structure or law or political events need to be managed. Geopolitical risk is certainly very much alive and well in markets. I think many people can learn lessons from the UK experience. I think the most important thing is that these events, whilst they can be very disruptive to markets and market participants, if they have a democratic legitimacy, then everybody needs to find their way, recalibrate, and manage through that and make sure that the new order is fit for purpose. So many institutions have had to navigate and will continue to have to navigate all manner of political and geopolitical change.
Sure. Michael, I think we have to leave for another podcast with you, matters such as ESG and blockchains and digitization, cybersecurity risks and all of that, which also bring challenges to both the directors and this question of governance and integrity. But I want to have a final question for you, and that's take into account the extensive decades of banking experience you have. You still serve on as chairman of one of the JP Morgan companies, is it? Which one is that?
I'm an independent director at JP Morgan Securities PLC.
Yes, okay, fine. So given your many decades of experience, and I think if anyone were to Google not only CISI but Michael Cole-Fontayn, you would find that he has done a tremendous amount of work and is respected as a scholar and a gentleman and all of that. Against that background, or rather leveraging all of that, can I ask you a question? What lessons, Michael, have you got to share with younger professionals on what I call leadership, humility, and integrity?
Gosh, Ranel, thank you for that. I think in order to lead, you need to serve the organization and the colleagues that you are privileged to have an opportunity to lead. That probably puts me in the servant leader model. And like our armed forces, I believe that to lead is to serve. Leadership is an enormous privilege. And when you can affect so much about an organization, but principally its culture, its integrity, its purpose, that is a great privilege. I would also mention that leadership is quite a lonely business as well. And so when there are forums and opportunities to encourage colleagues in any organization I have the privilege of working with, I will often be heard saying that you can lead from anywhere. You can lead in your community, you can lead in your organization. I would encourage colleagues to be engaged, curious, question the organization, but also have not only the organizational development plan, but have a personal development plan, because I think that allows people to fulfill their potential. And leaders have to fulfill the potential of any organization that they are leading. And in order to do that, you need to really be clear about the organization's purpose. You need to have an understanding of how it serves its stakeholders. In financial services, particularly your customers, your clients, in our case at the CISI, our members. Each and every day, we need to ensure that the membership journey is a worthwhile experience. Our colleagues need to have worthwhile career experiences as well. And so if all of that adds up to the responsibility of leadership to get the followership of whether it's members or whether it's colleagues, I would encourage everybody to practice and flex their leadership skills. It starts in the family, in school, in community, in higher education. You take your leadership style into work. We have all sorts of colleagues who are leading different functions, and they are doing a wonderful job. But thank you for that question on leadership.
Thank you very much. Michael, I want to thank you, but before that, I want to thank you in particular for one thing. I serve on your National Advisory Council, but I have endeavored, as I always do, to be independent of all of those. And thank you for allowing me to ask you searching questions and the privilege of meeting and talking with you.
What fun. Thank you, Ranel, very much indeed. And let us hope this is maybe the first, but not the last.
Of course.
Thank you, Ranel, very much. Thank you. Thank you for listening.
Thank you.